Hi everyone. So as normal, I'll take you through the items to watch out for in the week ahead in markets, including a rundown of this week's economic calendar. And I'm also going to give you three, I think, less often spoken about reasons that the Dow Jones stock index could be the next to reach a record high. GKFX Prime presents the week ahead. So last week, the Dow Jones Index had a reshuffle, which kicked out ExxonMobil, which under one guise or another has been in the index for nearly 100 years. But did you know that Charles Henry Dow and Edward D. Jones first began computing a daily stock market average in 1896? They added together 12 industrial stocks and divided them by 12 to get the average. A simple idea that led to us trading index CFDs 124 years later. If that extra tidbit of index information tickled your fancy, please click the like button. It really does help us spread the word about these videos. China PMI data kickstarts the week with a deterioration expected in both services and manufacturing. The August reading for German inflation follows. There's the RBA rate decision on Tuesday, and then we've got PMIs from ISM, first manufacturing on Wednesday, then services on Thursday. Then surrounding those, we've got the big US employment data, first ADP midweek, and of course non-farm payrolls on Friday. So the first reason the Dow could hit a new high next, after the S&P 500 and Nasdaq have already done so this year, is the Dow's reshuffle. The Dow added Salesforce, which just announced profits that smashed expectations in the second quarter. The index removed ExxonMobil, which has been a top underperformer this year, as big oil company profits have been battered by the slump in the price of oil. If you add shares that are going up and remove shares where prices are going down, you have what is called a selection bias, which will tend to help the index go up over time. The second reason is sector rotation. It's coming to the end of summer, which can be a good time to review the performance of different stock market sectors. If we look at the S&P 500, it has been technology, higher by 28%, and consumer discretionary, which is basically Amazon, up by 23%, as the big winners this year. Those sectors are poorly represented in the Dow. Energy and financials, however, have been top sector decliners, and have heavily represented in the Dow. If investors were to switch into shares of perhaps middle performers like industrials and materials, then the performance of the Dow would be closer to the S&P and the Nasdaq. The third reason is don't fear all-time highs. According to Virtus Investment Partners, on average the performance for the S&P 500 is better after 6, 12 and 24 months from a record high than all other days. If the S&P 500 continues to move higher, the Dow can ride that bull market wave higher, with a delayed record high for itself. Right, thanks everyone, good luck trading, and make sure to subscribe to our channel so you don't miss our next video.